You've got movable incomes, which you can manage when you relocate abroad, but the gains and the rental and the inheritance tax will stay with the UK. So when you go expat, what happens is that the movable income is lost and you're left with still, with the split year treatment, UK liability to capital gains, rental and inheritance tax. So that's three things to still manage. So even with the split year, you've still got income that's liable for tax in the UK. If it's a capital gain that you want to avoid, if you're a crypto investor, a share sale like Matalan or an investment sale, you can have a deferred tax as a UK expat and defer that tax for up to 5 years. And to do that, you need to go expat in the year before you're tax resident. So you start the year with a liability to full tax income. During a year, you've still got a liability to capital gains, even though you've used a split year rule. You've still got that capital gains liability. You've still got that property rental liability. You've still got the inheritance tax liability. The capital gains still applies in the year of a split year treatment because that is the rules. Now, if you go expat before the end of the tax year, and then the following tax year you choose to dispose of investments or have your public business go public or your business sale proceed, or you decide to sell your crypto, then if it's in the next tax year, you can save the capital gains tax as well. So a split year treatment doesn't protect you from capital gains in the year of your transition. So you can leave in the middle of the tax year, all your income up until the day that you leave, all your dividends, all your interest and royalties up until the day that you leave is taxed in the UK. With split year treatment, then after that time, the only liability you've got after applying a split year treatment is for the capital gains, property rental and inheritance tax. Okay. If you wait till the next year, then your capital gains is tax free as well. So on the basis that with a UK expat, it's a deferred liability. So if you remain expat, you won't pay tax on that gain if you stay outside the UK for 5 years. Property rental income, property rental gains from UK property is always going to be a capital gains and an income tax in the UK. But that's good news because you could be earning overseas as an expat and still have property rental income to use your personal allowance of £12,500 in the UK. So you're going to earn £12,500 without paying that £2,500 income tax in the UK because you're using your personal allowance. So that is a benefit of a split year treatment.